to everyone joining us from around the world. Whether you're just waking up, midway through your trading session, or winding down for the night. Welcome. On behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. My name is Vincent, and I will be guiding you through this exciting 2-hour journey as your host. Today's live stream is not just a presentation, it's a conversation. It's a window into the engine room of one of the most fast-growing and forward-thinking funded trading firms in the industry. And of course, I'm not here alone. I'm joined by two remarkable guests who have helped shape what WeMasterTrade represents today. Skilled trader, mentors, and role models within our community. First, let me introduce the ever-composed, always insightful Paul. Welcome, Paul.
Thank you so much, Vincent. Hello everyone, and thank you for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about trading strategy or rule, but about the ecosystem that WeMasterTrade offers, from how you start, how you grow, to how you earn. This is the kind of platform that doesn't just fund trade, it builds trader.
Absolutely. And next to him is someone who brings sharp analysis and clarity to every chart and conversation. He's strategic, he's sharp, and he's a real force in our trading space. Please welcome Honest.
Thank you, Vincent. And hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me about today is that we're going to unpack everything, not just what WeMasterTrade offers, but how traders can truly take advantage of each part of our system, from packages to promotions, to scaling and long-term profit sharing. If you ever had questions or doubts, today is the day to ask them.
And that's exactly what we are here for. Whether you're brand new to WeMasterTrade or already a part of our funded trader program, today's live stream is going to give you a full picture, not just the highlight reel. Over the course of this session, we are going to walk you through what WeMasterTrade truly is, what we believe in, how our programs are designed, and why we are doing things differently from traditional brokers or broker firms. Now, I want to be clear. This isn't about sales. This is about understanding. We want you to know what you're signing up for, what kind of structure support your journey, and how you can use that structure to not just succeed but scale.
And speaking of structure, we'll begin by sharing the story behind WeMasterTrade, how we were formed as a funding project, not a broker, which is a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly, and from that philosophy flow everything we offer, especially our training packages, which will be discussing in detail. We'll explain the logic behind each one. What kind of trader they ever look at our package and through. Which one is right for me? Today we will answer that.
And more than that, we also do a live comparison between packages. We will break down pricing, account size, maximum drawdowns, consistency rules, and even payouts, side by side, to help you make a fully informed decision. It's one thing to see numbers on a website, it's another thing to understand the intention behind them.
Right. And once you understand the packages, the next question is always, how do I stay confident while trading? So we've moved naturally into discussing trading rules, which honestly is one of the most important parts of today's session. We'll explain what the daily loss limit is, how it's calculated, why it includes both closed and flowing BNL, and how to avoid violating it, especially overnight. We'll go into the maximum total loss, the consistency ratio, and We'll even address common misunderstandings about trading sizing and risk per trade policies.
And we want to explain rule in isolation. We explain them in context of live trading session. We'll share some personal example of mistakes I make when I first start trading under funded condition, and how I adjusted because rule I mean restrict you, they protect you the integrity of your growth.
And while we are on a topic of helping you succeed, we will guide you through our current promotion plan, including limited time discount codes, trader support campaigns, bonus capital opportunities, and how to probably qualify and submit proof. We had some amazing response to our promotions, but also some confusion. So we'll be showing you exactly what to do, step by step.
From there, we'll transition into a discussion on our scale plan, which I personally think is one of the most underrated parts of WeMasterTrade offering. Many people don't realize this, but we have a structural growth pathway in place. If you perform well consistently, you don't just get payout, you actually unlock higher capital tiers. Uh, it's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speak of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit sharing model. This is the heart of what makes us different from broad firms. When you trade on a funded account and generate profit without breaking rules, we share that profit with you up to 90%. But there's more to it than just the percentage, where we plan them the full payout cycle, result, and timeline to them.
Now, I know many of you watching today aren't just traders, you also educator, influencer, or people with large networks. That's why we also taking time to explain our affiliate program, and we will do it transparently. We walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to qualify for payout, including a detailed explanation of the two referee rules and minimum funding conditions.
This is especially important because we want all our partners to feel confident and clear about their earnings. We've seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the terms, and building long-term income streams.
So as you can tell, this is not just a surface level live stream. We are diving into everything: packages, rules, promos, scale up path, profit sharing, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And we want it to be interactive, not just informative. So if you have any question at any point, please drop it in the chat. Our moderator are watching and we will answer as many questions live as we can. Your voice matters.
And if you're watching this on replay, don't worry. We'll leave timestamps and summaries below, and you can always reach out to our team with any follow-up inquiries. Our support team is incredible, and they really care about helping traders succeed.
To wrap up this welcome, I would like to say this: WeMasterTrade is not just a platform, it's a commitment to be real traders, to create fair, structured, and scalable pathway for people around the world who are serious about trading as a profession, not a game. So if you're here to grow, to understand, and to take action, you are exactly where you need to be. Let's dive into the journey together. Let's begin, and once again, welcome to the WeMasterTrade live stream. Now, before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you a full picture of who WeMasterTrade really is, what we believe in, and why we are building this platform the way we have. Because when you put in your trust and your trading into a company, a Understanding its philosophy isn't just helpful, it's essential. And so this next segment is about origin, intention, and impact. It's about how WeMasterTrade began, what values underpin the firm, and how those values translate to real tools and outdoor for traders like you. And to walk through that, I'm joined as always by two people who live and breathe this principle, Paul and honest. Let's start at the beginning.
Thank Vision. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many platforms or brokers that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capital traders access to capital, regardless of their background, location, or financial situation. We were founded in 2022 as part of WeMasterTrade Group, headquartered in Vancouver, Canada, while WeMasterTrade built name on signal sharing, investor network, and copy trading tech. WeMasterTrade was designed to serve a more focused vision to identify, spot, and scale high potential traders, giving them a pathway to operate professionally without risking out their savings.
And it's important to note, WeMasterTrade is not a broker. That's not just a label, it's a fundamental difference. We don't profit from spreads or commissions. Our success is directly tied to the success of our traders. That's why everything we've built, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk. We give you the roadmap, you bring the skill. But we also know that skill alone isn't enough, which is why one of our founding principles is education first. We don't want traders to blindly follow rules. We want them to understand the logic behind the structure. That's why we've invested heavily into WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, with courses ranging from introductory trading psychology all the way to advanced risk calibration and multi-asset strategy design. The WeMasterTrade Academy isn't just about theory, it's about implementation. We have designed a curriculum to match the real-world trading environment within WeMasterTrade. So what you learn, you can apply directly to your funding account. And to ensure that our system and content meet global standards, WeMasterTrade is proud to hold an ISO 21001-2018 certification, which confirms that our educational products and trader development programs meet rigorous international criteria for quality, structure, and learner engagement.
That certification is a big deal because it's a long-term commitment to developing traders, not just collecting fees in an industry where many platforms come and go. WeMasterTrade has positioned itself with real operational stability, compliance framework, and internal accountability. We're not here for a season, we're here to help build career.
And we've seen that commitment translate into real stories. If you visit our testimonial page, you find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa on talking about how WeMasterTrade helps them not just earn more, but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without emotional burden or risking personal funds. We've had students become full-time traders. We've had women re-enter the finance world after career breaks. And we have young professionals from underbanked regions finally access the market with a funded account. That's the impact. And that's what drives us.
And it doesn't just stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog session where our team of experts and educators take quickly insight, trading psychology breakdowns, market reactions, and platform updates. We believe that learning never ends, and we keep our traders informed. But let's talk about the culture. What makes WeMasterTrade different isn't just the product offering, it's the community mindset. We active promote trader integrity, respectful competition, and knowledge sharing. Whether you in a Telegram group, watching our YouTube series, or engaging with us on live support, you will see that we actually listen.
And I speak honestly here in many platforms, the trader is just customer. At WeMasterTrade, the trader is a product. Your performance drive the business. Your voice set platform and your consistency determine how far we can scale together. That mutual accountability is rare and it's something we're proud of.
And if you ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonials, take a look at our funded accounts, and connect with people who've gone through the system. The story are new, the capital is real, the results speak for themselves.
To summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education-first trading institution. We are here to challenge the status quo of trading access, to build systems that reward performance over promotion, and to create real, scalable income opportunity for traders around the world, regardless of their starting point. This is more than a platform, it's a trading movement. And if you are ready to be a part of it, today's live stream will show you everything you need to know. Thank you, Paul and Honest, for that deep and honest walkthrough. Coming up next, we are going to check this foundation and connect it directly to our actual offering. That means we'll be discussing all the different account packages available at WeMasterTrade. How they differ, who they are designed for, and what kind of results you can expect from each. Now that we explore who WeMasterTrade is and the principle we stand for, it's time to move into one of the most essential parts of this live stream, an in-depth discussion on our account packages. This is where it all begins for most traders, choosing the structure that best aligns with their goals, their style, and their current skill level. And when we say packages, we are not just talking about dollar figures. We talk about frameworks. Each package at WeMasterTrade represents a different pathway toward growth. And today, we will walk you through all of them, what they offer, how they are structured, and more importantly, who they are designed for.
Exactly, Vincent. At WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we build two distinct product lines for traders: the challenge package and the instant funding package. It will include a variety of account size and configuration because we know that traders come with different strengths, risk capacity, and timeline.
Okay, so let's begin with the challenge model. A two-phase evaluation system built for traders who want to prove their skills before being allocated capitals. It is structured, fair, and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulated account, and your goal is to meet specific profit targets while staying within strict but reasonable risk parameter. There are 3 trains total: phase 1, phase 2, and then the funded stage. Take for instance our 10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. Let's break it down phase by phase.
In phase 1, you need to hit until that 8% profit target with a 800 without reaching a 5% daily loss or a 10% overall limit. You have unlimited time to achieve this. That's the key different from many platforms. We don't pressure you with deadline.
Once you pass phase 1, you move to phase 2, where your profit target drops to 6%. That's $600. The risk rules remain the same. And here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, one both phase are clear, you enter the funded account where you trade with real capital. Have no profit target and your profit share jump to 90%, that's one of the highest in the industry.
This account is ideal for newer traders or experienced traders who want to start with lower pressure and learn the system. If you're still refining your strategy or want to get a feel of WeMasterTrade risk framework before scaling, this is the perfect package to begin with.
Now, for those who are confident in their strategy and want to start with a larger account size, we offer 25,000, 50,000, and 100,000 challenge packages. The structure is similar, two phases, the same 5% daily and 10% total loss limits, but the profit targets scale proportionally.
For example, in the 50,000 challenge, you need to hit 4,000 in phase 1 and 3,000 in phase 2. While the targets are higher, the level remain the same 1 to 100, giving you room to adjust position sizing.
The $25,000 to $100,000 challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funded accounts. If you already passed other prop challenges or have a strong verified trading history, this is a good step up.
Every challenge package comes with a one-time fee. For example, just $45 for the $10,000 challenge. This fee is refundable once you become funded, and minimum performance conditions. And if things don't go your way, you are eligible for 30% reset discount to start fresh. What if you don't want to go through a challenge at all, but instead want to access real capital immediately and get paid based fully on results? That's where our instant funding packages come into play.
And this is where WeMasterTrade truly sets itself apart. Our instant funding model is designed to give experienced, disciplined traders the chance to trade real capital from day one. No evaluations, no demo stages, just pure live trading backed by a structured, fair, and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, reference, and goal. Today we're going to walk you through each of 5 main instant funding packages: standard 51010, 510 51010 OBC, and customized. We compare the detail, but more importantly, we will help you figure out which package is right for you.
Let me set the scenes quickly. All of our instant funding packages give you live trading access from day one. That means no challenge phases, no evaluations. You pay once, follow the rules, and you are trading live capital. And every account, no matter the size, includes no time limits, up to 90% profit share, scale up land toward 1 million, and support for EAs, swing trades, Scobit, and even HFT. Now, let's go package by package. And as we go, for owners, I want you to jump in with real advice. Who should actually choose which one, and what kind of traders you see success with each.
Alright, let's start with the standard package. I already described this one as the best friend for traders who just want stability. You getting up to 200,000 in capital with a very manageable 4% daily lot limit and 6% overall limit.
It's like that calm, steady account that doesn't push you to overtrade. With the profits up to 90%, there's serious earning potential, even if you're taking a slow and steady approach.
And how about the commissions?
Competitive across the board, Forex at $4 per slot, Gold at $4 per slot, Indy at $1, stock exchange $0.07 per lot.
And everything is loud. News trading, scalping, weekend holding, EAs, HFT, you name it.
So for the audience, if you are someone who trades regularly, understand your strategy, want a full range of assets, and plan to play the long game, this is your sweet spot.
It's perfect for intermediate to advanced traders who already know their edge but don't want to test with a target-based challenge. And if you ever had an account that gives you unrealistic views, you find the standard model refreshingly fair.
I also say choose WinTrader. The 4 or 6% risk profile gives you enough flexibility to hold multiple day positions, especially with weekend holding fully allowed.
Alright, moving up a gear, let's talk about the 5-10-10 package. Same capital ceiling, up to 200,000, but now you get a 5% daily loss and a wider 10% overall loss limit. Why does that matter?
That extra cushion is massive for traders who scan two positions or take multiple entries per setup. You've got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, which align well with the risk window, plus you still get full support for scalping, EAs, new trading. It's very trader friendly.
This is best for day traders, especially those trading assets like Nasdaq or Volt that move fast. If you've got a tested intraday strategy and just a breathing room, this is your package.
And also for trader who want a structure but don't mind having that profit target, the clear master motivation people, especially if they pay out oriented.
Personal favorite, the 5-10-0. You get 5% daily and 10% overall loss, but no profit target, none, zero.
And that's a blessing for a high potential trader. You're no longer chasing a number, you just focus on protecting equity and growing capital slowly and safely.
This one is loved by low frequency traders and snippers. If you enter 3 to 5 trades a week, this is your space. You're not penalized for patience, you're actually rewarded for it.
Veteran, wing trader, risk conscious trader, people who prioritize consistency over speed, if that's you right here.
And let's be honest, not everyone wants targets. Some just want to. This is their home.
Now for the rule breakers, or rather, those who don't want to be evaluated on how even their profits are. The 5-10-10 no BC remove profit consistency tracking, right?
Exactly. Some change fire risk profile, but you're not required to keep your profit growth smooth.
That's it. Trader copier are not allowed in this one, so it's for manual trader only, and you need to trade responsibly. But for accessory trader who sometimes hit big spike, discipline.
Perfect for high risk reward trader or anyone who has issues with consistency rules and other firms. You trade how you want, just keep it inside the draw down box.
And last but not least, the customized package. This is WeMasterTrade saying, you know what you need, let's build it together.
And you can adjust daily loss over a lot to your liking, plus You can fund up to $400,000 more than any other account.
It's premium, flexible, and comes with own trading style allowed, including EA's news trading, weekend holding, HFT, and more. Top tier professionals, XH and SH fund traders, signal providers, high volume traders, anyone with a very specific structure in mind. This package lets you build it.
Alright, I always say if you try other model and nothing quite it, build your own blueprint with customized that freedom is rare.
To sum up, every instant funding package we offer comes with a clear risk parameter, fair commission, deep market access, and real profit potential. There are no time limits, and payouts start as early as 1 day in.
And no matter your strategy, scalping, swing, echo, and or manual, there's an account that aligns with you. The key is the picking the right one now, so you can start building consistency from the start.
And if you're ever unsure, our team is available 24/7 to guide you. With a real secret, pick accounts that fits your discipline, not your dreams. The profit always outperforms the biggest promise.
Up next, we will walk you through exactly how to protect your account, avoid breaches, and understand the key risk and consistency rules that power our entire platform. Alright traders, now that you've seen the packages, let's talk about the part that either makes or breaks your account. That's right, it's time to dig into the trading rules and how to actually stay compliant once you are funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their account is come down to one thing, the daily loss limit.
Yes, the dreaded daily loss is the one rule traders think they understand until it kicks them out of their accounts at 17 p.m. on a random Tuesday.
But here's the good news. When you understand how it really works, it becomes one of your best tools for risk control. So today, let's break it down from top to bottom.
So what is the daily loss limit, also called maximum daily loss?
It's the maximum amount of loss you're allowed to incur in both floating and closed trader on any single trading day. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction, and it's what trips a lot of people up.
Let's walk through a live example. Imagine it's the start of day 5, your balance is 105,000, your equity however is higher, 107,000, because of the open floating profit.
And if you're on the 4% daily loss limit, we calculate it for of the highest number at $107,000.
So 4% of $107,000 is around $4,000. That means your equity for the rest of that day can't drop below $102,000. Boom, the account is gone.
Right. And I think it's important to point this out. The system isn't waiting for a close. It's real time. Even if your trade is floating loss and you haven't closed it yet, if your equity dips below that threshold for even a second, that's it.
Now let's resolve it. say it's the start of day 7, your balance is $100,000, but your equity is $99,000 because your entries are slightly in loss.
Since balance is higher, we base the 4% on the initial balance, so $4,000.
So now your equity must stay above 96,000 throughout the day. If it drops to 95,999, auto liquidation kicks in. No warning, no margin call.
The system will send a market order to close on trades. Everything liquidated. Your account is disabled, and you can trade again unless you purchase a new package.
And here the kicker, the auto close happens when the system detects the result will cross it. But due to market fluctuation, your final profit and loss might worse than the actual result. That's because the system executes the closure based on price listed at the time of liquidation.
So even if you only intended to take a 3,900 loss, once slip is spiking, go or NSS DAQ, and suddenly it's 400 and 2,000. That's why we say don't ride the edge.
Alright, let's talk about how to avoid violating this rule, because this is where the pro mindset kicks in.
First tip, know your buffer. Never plan take to ride up to the edge of your limit. Leave at least 10 to 50% room below the mark loss, especially in volatile market.
Tip 2. Check your equity, not just your balance. I can't stress this enough. Most traders stare at the balance all day, but if your following loss is dragging your equity, you're heading toward a violation.
Tip 3. Use a dashboard or tracker. Inside WeMasterTrade, we provide risk dashboard that show your live loss status. Use them, check them, don't rely on memory.
Also, post trading after a big loss early in the day. If you lost 3% in the first hour of London session, maybe it's time to stop and reflect. Not trying to reserve, trade your way back up.
Another big one, trade smaller during news hours. If you're trading gold during an FP with full loss size, you're practically begging to break daily loss rule, cut position size, and ride post volatility.
What are the top rookie mistakes you see when it comes to the daily loss?
And number one, over leveraging. Trader opening position that are 5, 6 or 7% of their account thinking they close quickly, but if the trade turn red fast, it's really too late.
Number 2. Holding overnight without checking exposure. If you hold 3 trades overnight and wake up to a 60 pip gap, the daily loss could be hit before you even open your eyes.
And the third, assuming that close trade are all that matter. They are not. Remember, equity includes both floating and closed positions. The total equity life is your score.
And I always say this to new trader, the daily loss rule isn't your enemy. It's your account ever, it decides to protect you from doing something irreversible.
Exactly. It forces discipline. It can be aggressive, but only within the box. And if you learn to trade inside the box, you last longer than 90% of market.
And one last note, this isn't just about rules, it's about trust. We MasterTrade fund you because we trust you that you will manage risk responsibly. The daily loss is there to protect the trust on both sides. And thank you for watching the whole time. Now we take a short break and then we'll come back later. Welcome back, traders. In the previous segment, we covered the daily loss rule, and if you haven't already clicked that one, you are missing out. But now, we move from the daily boundary to the absolute boundary. I'm talking about the maximum loss rule, also known as your account stop loss, the line that can't be crossed, not just for the day, but for the entire life of your account.
And this is where a lot of traders misunderstand how the rule works. They think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they chip it away their account and suddenly liquidation.
The max loss rule is last safety net. If your daily loss is your daily seatbelt, then max loss is your airbag. If the limit is hit, it means the account is deemed unsalvageable under your current trajectory and is closed immediately.
So, what exactly is the max loss rule? Let's define it simply. It's the total maximum amount you are allowed to lose across all trades for the entire account. If your equity, that is your real-time capital, including open trades, ever drop below a certain percentage of your starting balance, your account is gone. Period.
And unlike the daily loss, which reset every day, this one doesn't reset. It accumulates. You can lose 2% one day, 3% the next, and if your total loss across the line, that's it.
And the percentage limit depends on your package. It's typically either 6% or 9% of your initial balance. Not your equity, not your profit, but the original number you started with.
Let's walk through a concrete example. Suppose you have an instant funding account with a balance of $50,000 and the max loss is 6%, which is $3,000.
That means your equity can never go below 47,000 ever. Doesn't matter if you make 1,000 yesterday, the total loss from your high point back down to zero is what matters.
And remember, this rule includes both close loop and rolling losses. So if you lost $2,000 in close trades and you have another 1,200 floating in red, your equity is now at $800,000. That's below the limit. Account closed.
And just to be clear, it's not about the net gain or loss across trades. It's about where your equity stands real time, relative to that stop loss lot.
And here where it gets interesting and a little tricky. Let's say your account grew to $51,000, convert you in profit.
But your max loss limit is still based on your original $50,000 starting balance. So if your limit is 6%, the threshold is still $47,000. What changes is how much room you have to form before you hit it.
You now have $4,000 in total buffer because with 51,000 minus 47,000 equal 4,000. So your profits give you cushion, but the floor never moves.
Once your equity drops below that maximum, even by a few dollars, auto liquidation triggers. On trades are closed immediately at market price.
And again, like this, the daily loss, if there volatility or slippage, your account might close out below that line. That's your execution reality.
And most importantly, once it's breached, that account is permanently disabled. You will need to purchase a new package if you want to continue trading. No resets, no rollbacks.
Alright, let's get tactical. How do you actually trade inside this group without constantly worrying about it?
At first, track your total flow loss every day. You should always know how close you are to your mark loss law. Don't wait the dashboard warning. Calculate it manually.
Second, use your profits as protection, not permission. Don't treat floating profit as a green light to increase risk. Instead, consider locking in gains by reducing the lot size when you're ahead.
Third, manage your floating loss aggressively. Even if you are positive overall, a single trade with poor stop placement can take you from safety to shut out in a few minutes.
4. Stay cool when you close. If you down 5% out of your 6% limit, that is not the time to double down, that's the time to step away, hold and retain your entry.
Mistake: underestimating floating drawdown. Traders close 3 losers and think, okay, still got room. But they forget about the fourth trade floating minus 1/800.
Second, traders who trade recovering after a bad day. They lose 4% in the one day, come back win the next. They are thinking well, they make it back, and instead take another 2%, boom, violation.
Third, and this one hurt, ignoring slippage during major news. Even with a tight stop, news scandal can get you straight through your limit.
And the mark loss rule is there for a reason, it's not there to punish you, it's there to protect you from yourself. Every successful trader I know see that stop loss, whether personal or institutional, at non-negotiable boundary.
Right. It's a reality check. If you're consistently brushing up against your max loss, the problem isn't the drill. The problem is your system or your psychology.
At WeMasterTrade, we are not just giving capital, we are teaching structure. And the my loss rule is what separates gambler from professional. So remember, your my loss is a percentage of your starting balance, typically 6% or 10%. It's calculated using equity, not balance. It includes both close and floating losses, and once reached, your account is gone. Coming up next, we will explore the consistency rule and why steady profit matter more than big spike when it comes to growing, scaling, and getting paid.
If you ever made $5,000 in one day, then made $200 the next 4 days, and wonder why you pay out golf later, this next segment is for you.
And let's dive into rhythm of profitability and how to stay consistent under WeMasterTrade model.
Alright traders, we talk about the daily loss limit and we just covered the maximum loss rule, 2 pillars of protecting your capital. But now it's time to shift gears just a little and talk not about just risk but about result. Because here's the thing, it's not just about staying alive in the game. At WeMasterTrade, we want to see traders grow, scale, and actually earn. And to do that, you need more than just a winning day. You need something called profit consistency.
And this rule right here, the profit consistency rule is what separates a lucky spy from a reliable trader. It tells us whether you can make money over time or if you just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader is eligible for withdrawals, profit sharing, and even scale up. So if you're funded and you're wondering why your payout didn't go through, this rule could be the reason.
So let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profit, the lower your ratio. The less consistent, meaning you had one giant profit day and then smaller or losing days. The higher your ratio.
And the idea is simple. If 80% of your total profit come from one day, that's not consistency, that's a look or risk. We want to see the trader who make money, who make profit day after day, even if it's more than what we can scale.
The formula is really straightforward. Take your best trading profit and divide it by your overall profit since you started the account, then multiply it by 100.
So best day divided by total profit multiplied by 100 equal profit consistency percentage.
And a clear best day refers to your highest close profit in a single calendar day. And total profit is a sum of your closed profit minus every close loss or open loss across the life of the account.
Let's say you have the following results over 5 trading days. Day 1, you receive 100. Day 2, you receive 200. Day 3, you lose 50. Day 4, you receive 100. And day 5, receive 60.
Okay, that means your profit net net profit across 5 days is 100 plus 200 minus 50 plus 100 plus 60 equal to 410.
And your best day was day 2. That's $200 profit.
So now we apply the formula. 200 divided by 410 equal to 0.4878. Multiply that by 100 and you get a profit consistency ratio of 48.78%.
Now let's say your account requires 20% profit consistency with e-commerce. This trader is way above that, so they wouldn't qualify for a payout yet.
So even though this trader is profitable, they are not consistent enough. They had one big day that made up almost half of their total profit. That's not sustainable, and that's what we are looking at.
And this is where I really want to speak to trader. If you're relying on 1 or 2 big days to carry your entry account, that's not professional trading. That volatility, you can get lucky, but you're gonna stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluates your consistency over time. Traders who can sell long-term balance are the ones who get scaled up, who get featured, who gets trusted with more capital.
Alright, let's address the number. What's an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best days should not exceed 20% of your overall profit. Let's say you're over the limit, don't panic. You're not disqualified. You just need to keep trading and even out the curve.
And here how to do that. Trade smaller size for a few days. Take smaller controlling green. Arm for $200 or $300 days. Avoid big swing trade that could spike your ratio again. Spread profit across multiple days, no one month setup.
And for those using EAs, monitor your equity curve. If your EA is skewing profits heavily into the one day, you might need to rebalance it. The bot might be repeatable, but it won't pass this rule unless it's configured with payout logic in mind.
Okay, mistake 1. Traders hitting target early, then taking the rest of the week off. That inflates your best day, leaves the rest of your curve flat.
And tip mistake 2. Overtrading after a big day, thinking I'm safe now, and trying to squeeze in more instead of averaging out that high result.
Mistake number 3. Thinking this rule is just a hurdle. It's not. It's a reflection of what we actually look for in our master trader.
Alright, let's talk about why it rule matter. At the end of the day, this isn't about controlling you, it's about building habit that can handle scale. If you can be consistent with $25,000, what happens when we give you $100,000 or more?
Exactly. Consistency is what makes you safe to invest in. WeMasterTrade, we fund traders. We also study them. This rule tells us whether you're serious about long-term trading.
And we have seen it time and time again. The traders who respect this rule, they are the ones who get multiple payouts, referrals, and grow into a six-figure funded account.
So don't fear the rule. Understand it. Use it as a feedback tool. If your radio is too high, great. That means you got profit. Now keep going. Balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculate your profit consistency ratio automatically. You can check it any under your statistics tab.
To recap, this rule is about balance, not volume. Aim to keep your best day under 20% of your total profit. Spread your wins across multiple sessions and monitor your progress in the dashboard. We have walked through the daily loss limit, tackled the maximum account loss, and examined how your profit consistency serves your long-term payout and growth. And now, we arrive at the final and perhaps most overlooked rule of all. The risk consistency rule, or what we call the discipline test.
That's right. Traders often think the biggest enemy in market, but truthfully inconsistent, especially in how much you're risking from one to the next.
This rule doesn't look at how often you win. It looks at how stable your risk is and how professionally you're managing your position sizing. And if you're serious about scaling at WeMasterTrade, this rule is non-negotiable.
Let's break it down. At its core, the risk consistency rule is simple. You are not allowed to risk more than 2% of your initial account balance on any single trade idea.
And that includes all losses associated with that trade idea, both low losses and floating losses, even fee, commission, and swap accounting.
And for the 5-10-10 no PC package, this rule gets even stricter. There, the limit is 1% per trade idea, not 2%.
Because consistency isn't just about the outcome, it's about the process. The more erratic your position sizing is, the more volatile your equity curve becomes. And that makes you hard to scale.
This rule protects both you and the firm. It helps reserve capital, prevent large equity swing, and make sure your egg plays out over time.
Think of it as your cows hit heartbeat. If your position size pushes up and down, portfolio lost one day, file lost the next, the system flags in. That's not structure, that's chaos.
This is where it gets technical, but stay with us. The term trade idea isn't just one order, it's a group of trades that share the same logic.
Alright, if you open 3 buy position on go at different time, that's one trade idea.
Because it's the same symbol, same direction, and closed around the same time. Even if you open them at different times, they are seen as a single, unified position from a risk perspective.
So the system doesn't look at your trade in isolation. It groups them into a logical bundle and applies the 2% rules across the entire bundle.
And you can multiple separate trade ID as long as each one respects the the risk limit.
For example, if you go long on gold, short on GJ, and short on AUU, and each position has its own distinct direction and assets. Those are three separate trade ideas, and each one can result to 2%.
Let's say you go buy gold and then you go buy again and again. You now have three open positions in the same direction on the same asset.
The system treats that as one trade idea. So if you combine following risk or eventual loss from those positions, it says 2% of your starting balance. Boom, you've broken the rule.
Let's go hands off. Suppose you have a 100,000 account, the 2% average per trade idea, means you got to lose more than 2,000 on any trade idea. Total.
So you don't open two go by one lot each. You don't play a stop loss, new hit, market drop 100 bips, lit each lot loss at $100, that $200 total.
You write on the line. If slippage or swap as a few extra dollars, that's it. You've broken accounts flag or liquidated depending on enforcement model.
And on some accounts, especially instant funding accounts with stricter tolerance, this breach may result in loss of funding status or immediate closure.
Tip 1. Set your lot size based on account risk, not emotion. Know how many bips equal to 2%.
Tip 2. Use stop loss order repeatedly, set them based on risk per trade idea, not random chart level.
Tip 3. Don't set trades without calculating the market. Just because one position is below 2%, doesn't mean to
Label the trade ideas mentally. If you're entering on the same setup, treat it as one. Size it accordingly.
Tip 5. If you want to split an idea into multiple entries, do it smart, scale in smaller, use micro lot if needed. Keep your total exposure below 2%.
The most common reason traders break this rule: stacking multiple entries on one trade idea, thinking it's still separate.
Second, opening high-risk trader after wins, assuming they playing with the our money. Spoiler, the market doesn't care.
Third, neglecting floating loss. A trade may not be closed, but the floating risk still counts toward your 2% risk.
And why we enforce this rule? This isn't trade policy, this is professional, active, hedge fund follow this, bank follow this, real trader follow this.
Exactly. We're not here to micromanage you. We're here to protect your account, our capital, and the integrity of this community.
And traders who internalize this rule, who understand that small, consistent risk is the foundation of scalable capital. Those as the one we grow. Those are the traders who go from 25,000 to 1 million.
And if you want to be professional trader, you have to think like one. And professional trader always know how much they're risking on every trade every day.
And if you still get in your lot size or opening trades because the setup feels right, take this as a sign. Step it up, get structured.
This is more than a rule. It's a habit. Build it now, and the path toward bigger capital and larger payout becomes way more predictable. And that, my friends, wrap up the 4 essential rules of trading at WeMasterTrade. Daily loss, maximum loss, profit consistency, and risk consistency. Master these and you are not just staying compliant, you are building a foundation for serious capital management, long-term payout, and scaling. You're watching the official WeMasterTrade live stream, and the best is still to come. Now, before we end in with the live stream session, we will come to with the news. Let's start with New Zealand. Product price index for input and output came in weaker than expected. Input rose just 0.6% compared to the forecast of 1.4% and way down from the previous 2.9%. Output also slowed to 0.6%, missing the 1.0% forecast. That basically tells us cost pressure are easing in New Zealand. Less inflationary pressure could give the Reserve Bank of New Zealand a little more room to breathe. Meanwhile, in Australia, consumer sentiment surged, Westpac index jumped to 5.7%, way higher than last month 0.6%. That's a big swing, showing the confidence is back. So that is the layout for today. Some early surprise from New Zealand and Australia, and all eyes now on Canada and the US tonight. We will come back to cover the reaction once the numbers are out. Don't forget to hit, like, subscribe, and drop your thought in the chat. What data do you think will shake the market most today? And for now, see you soon and happy trading.
you.